Imagine waking up one morning in 2025 and realizing that overnight, the value of your savings has collapsed. Markets are frozen, ATMs are empty, and the headlines quietly whisper a phrase we haven't heard in almost a century: systemic failure. Now pause for a moment, because this isn't a doomsday fantasy. This pattern has been repeating for over 100 years. 1929, 2000, 2008, 2020. And now, the indicators are blinking red again. In today's video, we're not predicting the end of capitalism. We're revealing the mathematical cycle that forces every major crash to happen almost exactly on schedule, and why 2025 to 2026 could be the most dangerous point in modern financial history. Before we break this down, make sure you like, subscribe, and turn on notifications so you don't miss the deeper truths about money they never teach you. Every major financial disaster, whether it's the Great Depression, the dot-com collapse, the housing crisis, or the 2020 pandemic shock, begins long before the crash. It starts quietly, small signals, small cracks, tiny anomalies hidden deep inside the global economy. And today, those cracks aren't tiny anymore. We have the highest global debt levels in human history, record-breaking stock valuations, a fragile tech sector inflated by speculative AI money, and a geopolitical landscape more unstable than in 50 years. In other words, the system is stretched, and when any system overstretches, it snaps. Today, we break down exactly why economists believe the next snap is coming soon. Financial historians have been mapping market collapses for over a century, and the pattern is shockingly consistent. Every 10 to 15 years, markets reset themselves. 1929, the Great Depression. 1946, post-war inflation crisis. 1960s to 70s, stagflation. 1987, Black Monday 2000. Dot-com bubble 2008, housing collapse 2020, pandemic crash, the underlying cause. A simple cycle: boom, overconfidence, excess debt, fragility, collapse, recovery, repeat. The crash isn't the surprise, the stability is, and right now we are at the peak of the overconfidence stage. Think of debt as oxygen. Too little and the system suffocates, too much and it becomes explosive. In 2008, household debt triggered the collapse. In 2020, government debt exploded to keep the system alive. In 2025 to 26, economists worry about something new: corporate and sovereign debt at record highs. Countries, companies, even consumers are borrowing in a world where interest rates are rising again. This is the perfect storm: more debt, higher payments, slower growth, and an increasingly fragile financial structure. You don't need a PhD to see what happens next. AI is changing everything, but it has also created a new speculative bubble. Billions of dollars are being poured into companies with no profits, no real revenue, no business model, just hype and projection. This is identical to the dot-com bubble of 1999, but this time the numbers are bigger, the bets are bigger, and the risk is global. If AI investment slows even slightly, trillions in market value could evaporate within days. The world hasn't been this unstable since the 1970s. We have US-China rivalry, war disruptions, supply chain fragility, energy price volatility, a global currency shift, financial markets, hate, uncertainty, and the modern world is uncertainty on steroids. One geopolitical shock in 2025 or 2026 could be enough to push a fragile system into a full meltdown. Here's the truth. Almost nobody is willing to say the crash isn't the real problem, the recovery is. In the past, recovery was easy. Lower interest rates, print money, stimulate demand. But today, interest rates are already high. Inflation is already a threat. Governments are already drowning in debt. Consumers are already stretched thin. This means the next crash won't be like 2008. It will be like 1929 and 2008 combined, because the tools we usually use to fix the economy no longer work the same way. The world isn't prepared for a financial reset, but the math says it's coming. So here's the question we should all be asking. If history repeats and cycles are consistent, And the signals are clear. Then is 2025 to 2026 a coincidence, or is it simply the next scheduled reset of a financial system that has reached its breaking point? The answer won't come from politicians or influencers. It comes from understanding the patterns hidden beneath the surface of money. If you want to stay ahead of those patterns, subscribe to Lazy Economist and be part of the few who actually understand how this system moves. Because the future doesn't belong to the people who panic. It belongs to the people who prepare.